let's just throw something out there. I've got all these support levels drawn. If you get something like China saying we're not doing a deal with the US and we're moving in the opposite direction, like something, or China invades Taiwan, or something insane, right? Something seriously changing the environment, these support levels mean nothing in a true fundamental sell-off. I mean, just take a look at what we saw in April. When trade uncertainty became rampant, there was no such thing as a support level that would hold. Support here didn't hold. Support here didn't hold. Support here didn't hold. So understand that technicals, this is my opinion, and people have strong opinions on everything, but my opinion is that technicals bow down to fundamentals, not the other way around. Technicals obey what's actually moving the market, which is economies, corporate profits, and sentiment of the financial markets, right? People feeling like earnings can continue to grow for companies because environments look good, or people really scared about earnings because again, something disrupts the status quo. So right now, if you ask me, Nick, is the market more likely, and when I say the market, I'm talking about the stock market, the indices levels, are they likely to keep moving higher? Or are they likely to come down? Most of the time, the correct answer is the indices should continue to go up. But understand that as a trader, just because something might most of the time move up does not mean that the risk to reward heavily favors it at this time. So for me personally, the risk to reward buying the indices at what I believe to be very expensive levels relative to their earnings specifically, to me, the risk to reward skews not so positive for buying at these levels. Now, if you gave me, a 5% pullback in the S&P 500, which would put us at, let's see, where would that put us? That'd put us back at 6,100, give or take. That risk to reward level looks significantly more attractive to me than buying the S&P 500 after we've had such a strong run up. Now, again, the market could keep going, but that's not a bet that I'm willing to personally take in terms of adding new positions. So instead, what I've personally done is I've trimmed some of my positioning. I've trailed out of my Russell 2000 trade. I took profits on this one, right? So if we pull back, I have some dry powder, some availability, some margin, some cash, whatever you want to call it, in my portfolio. I have the ability to then take advantage if we were to see some pullbacks in this market. I am sitting on, I'd say, about 15 to 20% cash right now, which is pretty high. It is in the market timing category, so I'm a little more cash than I'd like to be. What I mean by that, by market timing, is that when you're sitting in a lot of cash, that is essentially a similar concept to being not invested / almost being like short. So I'm not like wanting to be short. So I am selling puts, cash secured puts on things if we do get some sell-offs, if we get some volatility. But that is how I'm positioned. I think the markets are a little stretched. You guys know, if you've been watching, I am a bull on this thing. I've been a bull, but I think it's also appropriate to say there's a time to be, rolling up the sleeves and buying stuff. And there's a time to be cautious and be defensive. For me, I am a little bit more on the defensive side when it comes to the indices. Not bearish, but cautious. So with that said, that's my take on indices. A little stretched, not willing to short, but interested in pullbacks, if anything. Dow Jones sitting at those highs, testing major resistance at 45,000. We'll see if we can overcome that 45,000 level, or if we're going to pull back a little bit. I like the Dow if you get a pullback, but otherwise I probably can't justify anything at this time. Dow Jones maybe at 44,000 would look attractive. We'll keep an eye on that one. That could happen. And that's the thing, guys. Like, everybody gets used to the indices going up every day, and then all of a sudden things change. Volatility can expand rapidly and oftentimes does much quicker than people think. just when everybody starts chasing Palantir, right? This is a company that has done phenomenal. Like this is something you have to be careful about is stocks like this. Again, phenomenal company, very cool company, but the stock itself is very expensive, like very, very, very expensive. And so while, again, I wouldn't short this thing, it's a reflection of market sentiment in some ways, where you're getting some very hot meme stocks just pumping and pumping. And Palantir is not a meme stock. It's a real company. It offers a really cool service and product, but the valuation of the company is insane. So for me, I can't justify buying these sorts of things. Great company. If it goes down 50%, I'd look at it. But for me personally, I can't chase things like this.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Let's talk a little dollar. Dollar index is pushing higher. I think we might be, I've said this the last few days, I think we might be seeing a turnaround in the dollar. Trade deals secured. Economic heat map has been pretty strong for the US dollar. Let me show you that. So if I pull up our US economic heat map for a moment, take a look at this with me and you can see what I'm going at here. Let's go line by line really quick. GDP statistics in the US, they were bearish for the dollar. They were a little bit soft. We get new GDP numbers coming up soon. Actually, what do we have today? I think we have JOLTS today. Yeah, we have JOLTS job openings in 45 minutes. So we'll see how that impacts. JOLTS last time around were really strong for the US. So we'll get to that in a second. Manufacturing PMIs, this forward indicating look at the economy, stronger than expected. Services PMIs, 50.8 compared to 50.8 expected. Neutral, came in line with expectations. Retail sales were stronger than forecasted, bullish for the dollar. The consumer price index, inflation came in line with expectations at 2.7%, giving us a neutral bias on the dollar. PPI came in bearish for the dollar because it came in softer than expected inflation. Remember, we're looking at the actual versus the forecast number. This is how we rate or strong versus weak each of our currencies, commodities, etc. We look at the data, the stuff that really matters. Next, we take a look at PCE. PCE actually came in a little bit stronger than expected, strong for the dollar. Wage growth came in soft, bearish for the dollar. Now we get into the stuff that looks really strong for the US dollar. Unemployment rate ticked lower to 4.1% than expected at 4.3%, bullish for the dollar. Initial jobless claims last time around came in at 217K, lower than expected. Remember, less people filing for unemployment claims. That's good. It's positive for the dollar. Let's keep going. JOLTS job openings. Last time, we'll get fresh data today. Last time were better than expected. Bullish for the dollar. ADP was not good. Bearish for the dollar. Non-farm payroll was very strong relative to expectations. Very bullish for the dollar. House price index, slightly lower, bearish for the dollar, and but mortgage applications up, bullish for the dollar. So there you go. Overall, the USD impact is positive. We're seeing some strength for the US dollar, which has not been there in a little while. And so when I look at the US dollar, the DXY dollar index, I see a chart that has been trending lower, has now gone sideways, and is testing resistance here. So if I'm looking at the dollar, my opinion on this is if you're very bearish on the dollar, be careful, because we've seen something interesting happening. Let's take a look at institutional money moves, and let's take a look at the COT data history so we can look at what institutions have been doing recently. So recently, institutions have been selling the US dollar. Let me use a different color. Let's use white. institutions have been selling the dollar, selling the dollar, selling the dollar. And then recently we've seen a little uptick, little bit of normalizing. Keep an eye on this because institutions are not really heavily positioned one way or the other on the dollar. 45% long, 55% short. So institutions slightly lean short on the dollar, but it's really not substantial. So when I look at the dollar index, I do want to keep an eye. Of course, this data will update each Friday. I want to keep an eye on institutions to see if they start to accumulate a long position on the dollar, because if you get long accumulations on the dollar, watch out, because that is a lot of times, like, look at this, institutions, they've been riding this downward trend very nicely, been selling into the dollar. If they start to shift, if institutions start to go the other way, and there's another thing I want to talk about. This is probably topic of the day for me. Retail sentiment. Let's keep it a close eye, guys, on what's happening with the dollar, because I have a forecast on this, and it's starting to happen. My forecast on this is that the dollar index is turning because, look at this, dollar index starts moving up. Let's just really quick run through some FX stuff. Euro dollar starts trending lower, breaking support. Pound dollar breaking support. Dollar yen testing resistance. Let's see what happens there. Dollar Swiss coming back to resistance. Dollar CAD testing resistance, right? Hold on. USD CAD. I'm on the wrong USD CAD because it doesn't have my chart. I want USD CAD. Oanda. There we go. Where'd that go? What the heck just happened? USD CAD. Add this. There it is. And I want to get rid of this one, keep this one. Okay, dollar CAD. Looks like it's testing the upper limits of resistance. So stick with me on this because, again, I think we are seeing something happening. And here's where it gets interesting. The Australian dollar against the US dollar, trending up for a while. Keep your eye on this for a second. The Kiwi against the US dollar, the New Zealand dollar versus the US dollar, moving lower. You ready? Retail positioning is shifting. What we see is retail sentiment is now shifting a little bit, where we see the NZD USD and the Australian dollar getting contrarian bearish signals. That's bearish the Aussie, bullish the dollar. Bearish the Kiwi, bullish the dollar. You see what I'm saying? Why? Because look at what the crowd is doing. The crowd is buying the Australian dollar and the Kiwi dollar. This to me tells me we may be on the cusp of a turnaround in some of these dollar crosses. Keep a close eye too on the, we might as well have this contrarian bearish signal as well. The threshold in the Edgefinder's retail sentiment is 60%. So look at this. Euro dollar's at 59% long. So retail is buying. Retail is buying on the euro dollar, and they're buying on the Aussie dollar and the Kiwi dollar. The reason I bring this up is that this is what we said a week ago. People were asking, is the dollar turning? And the thing that I've been waiting for is to see the crowd sentiment flip from bearish on the euro and the pound and the Aussie to start to go bullish.
In terms of the markets, so what has been happening with the markets? Hello, Lauda. Well, we have a lot of news upcoming for this week. A lot of news. The most important news is for the USD. So we're getting the Fed press conference and the Fed interest rate decisions. So a lot of traders are watching this because we still have 2 rate cuts priced in for 2025, but it is not yet certain if those rate cuts will actually happen, or if the rate cuts maybe won't happen, if there will only be 1 rate cut, or maybe even 0 cuts for this year. Again, no one really knows, but currently we still have priced in 2 rate cuts. Okay, so for this beginning of the stream, I want to take a look at the dollar. so the DXY, and I want to take a look at the S&P 500. That should give you or give us a nice reading on what is happening in the markets. Hey, FX Bashi, thank you very much. Also, what I want to mention, we had some trade deals. So we had the EU and the US trade deal. What is pretty interesting is that the euro sold off on this news. See, and the DAX, which is the German stock market, initially sold off, and then now it is gaining some value back again. So you would think that this would be possibly positive for the euro US dollar and positive for the DAX, but maybe it was the case of buying the rumor and actually selling the news. So yeah, now let's take a look at the DXY, which is kind of the most important chart, in my opinion, during these times. A lot of people are short. So a lot of traders, a lot of investors have been short on DXY, have been short on the dollar, and we're betting on this downtrend to continue. Well, what we recently had yesterday and today, we're getting a really bullish reading or a big bullish move on the DXY. So the dollar is essentially gaining strength. We can also paint a trend line. So if we can do that here, you can see this was the initial trend line. It got broken. Price kind of broke up, retested it, and now it's moving even higher. So I think we have been talking about this for the last couple of weeks, that but most retail traders and a lot of investors were short, which could give you a nice bullish signal. So when everyone in the retail space is short, usually the price goes in the opposite direction. And now we have started to see that move. It makes sense because the dollar has been heavily oversold in the last few months. So I would actually expect this momentum to continue to the upside possibly. We're also getting some good fundamental data out of the United States. So data like GDP, employment, inflation data, it is mostly coming out bullish. So if I'm checking the Edge Finder, I can see that 62% of the fundamental data that is coming out more bullish for the dollar than expected. Also, inflation is looking good. It's kind of possibly a little bit elevated on some readings, but it is still not a big problem. The problem is for the rate cuts. For the rate cuts, we need to see bad, let's say, employment data, bad GDP data. And then for inflation, we need to see inflation going down. We need to see inflation steadily going lower for us to be confident in rate cuts. Okay, so right now, because of good employment, good, let's say, GDP, and in general, good US economic data, also inflation being a little bit sticky, we may not even get those two rate cuts, which is then hawkish for the US dollar. So that gives you a hawkish Fed, a hawkish central bank, which makes the dollar go up. So those two conditions, those two criteria, first one being that the dollar has been heavily oversold, and I mean really oversold, and second one being that the rate cuts are not 100%, like the confidence around rate cuts is not 100%. So we may actually get the dollar going up. We may actually get only one rate cut, or maybe even no rate cuts in 25. That's what you're seeing. I can see the price definitely pushing higher. As I mentioned, we broke that key trend line. And for the short term, I'm actually bullish on the dollar. I do think we could go up a bit more. I do think we can hit some levels, maybe even to here. But long term, I think we should move lower in the DXY. So something like this could happen, because rate cuts, in my opinion, will eventually come. Maybe not in 2025, maybe in 26. And you have the big, beautiful bill from Trump, which is going to introduce massive spending, massive increase of debt. So that all could make the dollar lose value. I'm in a trade on gold, or sorry, I got taken out, I believe. Let me see. On my FTMO, I got an email that I got taken out of the trade. Yeah, I'm out. So I'm out of this trade because I did move my stop loss recently. I did have a buy position running from the 10th of July. I did like it because it had a bullish reading on the edge finder, and it was a nice hedge. If we got some more tariff drama, it was a nice hedge against my risk on positions such as the DAX. I have some S&P 500. I have some Bitcoin, I have some Ethereum long term, and I had a trade on the New Zealand yen, which was also a risk on trade. See this one. I got taken out recently for a win, but the gold buy was sort of a trade to offset these positions and to keep me safe, to keep my account safe if we got some drama around the tariffs. So I know we got a deal between US and EU. I know there is talk of a deal between US and Japan. I don't think it's fully done yet, but most likely it's gonna get done. Okay, so most likely it's gonna get done. If it didn't already get done, I'm gonna have to check up on that news. So gold is gonna sell off on that news, right? Because gold likes uncertainty, gold likes massive threats from Trump, massive potential tariffs from Trump. That's what makes gold explode. That is why you saw a big explosion in the value of gold in 2025 because of Trump and his shenanigans. But now it's selling off because we're getting some certainty and confidence. And also, if you look at the price action on the daily chart, it is flat and range bound. So when the price action is flat like this, usually we move from the bottom of the range to the top and just keep ranging around. So what is needed for gold to break out, to move up, or maybe to even a sell off heavily? You need a catalyst. So now we need a big catalyst to see gold move. Okay, maybe this overall uptrend will continue eventually, right? We're still in the daily, or on the daily chart, we are still in a heavy uptrend. But the trade deals are bearish. Let's not kid ourselves. They are definitely bearish for gold. So they give confidence back to investors. They remove uncertainty, and the gold likes uncertainty, so we're getting a sell-off on gold, right? So I would say I'm neutral on this one. I'm neutral. I would not expect a huge move up anytime soon. I like silver much more if I'm gonna be a bull. Okay, if I'm gonna look for buy setups, I like silver much better because gold, in my opinion, has already had a pretty massive move. Silver, not yet. Silver hasn't moved yet. It had a good move, but not as big as gold. So silver could be a nice catch-up trade, could have nice follow-through in the upcoming next few months, okay, weeks or months. That's why I'm in a buy position and just trailing the position.
So just leading off from what Marco was saying about the rate decision by the Fed, we've already got an idea here by Bank of America. So this was from the 23rd of June. Basically just saying that they, let me just find the line here. Markets moved on as they increasingly discount headlines until they become indisputable facts. But these developments go in line with our view that the US economy will avoid a recession and the Fed will not cut rates this year. Then we got a follow-up on that, again from Bank of America. Basically saying that they have doubled down on that idea. So they are not expecting any rate cuts this year by the Federal Reserve, which is interesting. I've been saying it for a couple of weeks now. I'm definitely not expecting a rate cut this month. However, September, it could be different. Okay, so you guys are saying, I don't even know what the context is here. Let me pull up Forex Factory. I don't know what the previous was off the top of my head. Today is what we need, 97. Okay, well, this will be a bolster for the dollar. So I assume that's why we are seeing, yes, lower jolts, although the dollar is remaining very stable here due to a positive consumer confidence. Excuse me, sorry. So who's enjoying the dollar bullishness? Some of you may remember I was quite bullish on the dollar back on this weekly candle here when we had the doji. But you know what? It's just typical, absolutely typical. I had a pending order here on pound dollar to sell at it's pretty much 136, but I just moved up slightly to be in line with these lows and this previous high. I was traveling, market moved up and missed my entry barely and decided to start running down. So I'm not in the best moods about that. So it's just one of those things about being a trader. It's like you could have an idea that works out amazingly, but it doesn't matter if you're not in the trade. So I've still got this order here because we do have the Fed decision tomorrow, and that will give us forward guidance. So maybe if some spanner is thrown in the works, I might be able to get tagged in. But again, the context behind the trade might completely change in that case. I'm not sure if I even really want to be in it, but for now, it's still active, so I'll see what I get. But yeah, Fed guidance tomorrow, I would expect it to be same old, same old. We're not cutting rates. Rates are rates are held for data dependent, blah, 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 blah. Inflation this, labor market that. It's just just same old that we've been hearing the past couple of meetings. September, I think, in my view, heavily depends on the data we get on Friday. So let me pull this up for you. This week, we have got very typical Friday with average hourly earnings, unemployment rate, and the big boy that everyone loves, non-farm payrolls. So that will be interesting. And manufacturing PMI as well. So Friday will be a big decider. Not a big decider. It will be a big indicator to what we could expect from the Fed going forwards. You had a very similar thing marked on GU. I think it was very textbook, really, because we had hold on, I'm stuttering. It was the same thing on things like Australian dollar wasn't the same setup, but Euro dollar had a very similar price action behavior. And it was a case of, okay, they both rallied heavily. They're both relatively overbought on a technical view. COT data was extremely stretched. It was just a case of how big are your nuts? Are you gonna take that risk and buy this bottom of the dollar? And if so, I would have completely stood behind you. I think it would have been a little bit aggressive for me personally, which is why I didn't do it, but I would have understood it. So I was just waiting for really a confirmation, whether it be this lower high, which is exactly what I was looking for, or data or developments in the data, whatever it was. I don't care. But yeah, that was the idea really behind it. But yeah, there you go. It is what it is. Anyway, moving forwards, let me just double check the edge finder, make sure it's not changed. It's not. So we've got a theme, and you might be able to see the theme on my watch list. So we've got pound Aussie, pound Swiss, pound CAD, pound yen, pound New Zealand. Can anyone guess what the theme is? If you've got edge finder, you will know. Code Elite for a discount, by the way. Well, you know, it's looking like we should sell the pound. I mean, look at this: pound CAD, pound Aussie, pound dollar, pound yen, pound Swiss, pound New Zealand, all bearish readings. So that's lovely to see. I've been a bit of a perma bear on the pound for sort of the past year and a half, really. So I love to see it starting to decrease in value because it's a bit of a meme coin, to be honest with you. This country is an absolute mess in terms of the leadership and things. Anyway, let's not go down the political road. So I am looking to sell pound against pretty much every other currency, or every other major currency anyway. So pound Aussie, I would love to get short in two situations here. Either we have trusty brush tool. Either we have a breakdown below the 200 moving average, below these previous lows, and we can come back up, retest, and that would be a very bread and butter textbook break and retest pattern. And it lines up the edge finder. So how much nicer could it get? Not much nicer. The best outcome, however, would be if we stay in this range and then we do that, and then I can sell at the top. That would be perfect. But, you know, we don't go for perfect, we go for what pays. And in this situation, we just have to wait and see. Pound Swiss is tricky because it's very heavily sold off at the moment anyway. I mean, we're at, how long has this been going for? Back in 2020. So This is a 3-year low that has been pretty much failed to break. We've had some slight breaks below, but nothing's managed to hold below. So it makes me very, very uneasy being a seller right here. So to be honest, I would really need to see some sort of pullback into the 200. Also, a 50% retracement here, or something within this Fibonacci golden zone would be great, and then we can look to go short there. Either way, I'd be looking to be a seller as long as we can have a reasonable pullback. Pound CAD, exactly the same as the pound Aussie, so we'd be looking for a breakdown, retest, and a continuation lower, or we come back into these highs, and if the fundamentals are still supportive of being a short seller, then we sell the top, or in theory, we sell the top. I've seen a couple of messages come in. I'll read those in a second. Pound yen. Now this one's interesting, so I'm going to put you guys on some source. Just bear with me. I don't want to leak my files. This could pay quite nicely, but it also could be a bit of a mess. So please don't follow this one-to-one. But I'm actually going to put this on pound. On dollar yen here. So as anyone that watches this stream frequently may have heard Nick and I talking about the yen, and this was, I think, last week or the week before. We were talking about dollar yen could definitely see upside, but long-term downside is definitely possible. Now, Nomura, which is a institution, have exactly the same theory. So I'm not going to read all this, but just to quickly recap, they're basically saying that the trade development between the US and Japan, so obviously they came to a trade deal, is beneficial for the yen. They're expecting better data to come, and both of those things will be a catalyst for the Bank of Japan to start hiking rates again. They also see further downside on the dollar. I don't know if I see further downside on the dollar just yet anyway. So I'm not really going into that trade, but I've got it marked up. This is their exact position. Actually, the take profit's not there. It's much higher. I think the take profit's somewhere around here, 143, give or take. But yeah, their entry is at 147914, and the stop loss is at 151. So if you want to mark it up, feel free to. Again, it's not my trade. This is from a bank report. But that does lead me on to pound yen. So just with that similar concept in mind, that the Bank of Japan could now start hiking rates again and continuing their path to normalization if we do see that data start to support it. It doesn't right now, but it definitely could. And of course, pairing it again with the Edge Finder reading here with a pound yen with a very bearish reading of -10. The price action, or the current price level, I think is really, really nice to sell from as well. We've got this sort of triple top area. Price has failed multiple times to come any higher. I actually want to see, is this I don't think this is a fib level. No, it's not. That would have been lovely if this was like a 50% retracement. But either way, I think we may be able to get a really nice short here. And I think I may take this later today or tomorrow. So that's on the books. Pound yen is really the only one I'm actually interested in right now.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.